Yo, what's going on, guys? I want to go over my trade that I took on Monday. This was a long setup from December 16th. So if we open up Forex Factory, we can see that we had a week packed full of news, and there was 9:45 news on Monday. So we have FOMC on Wednesday, knowing that. But if you look at Friday, we kind of really didn't do much. So in a bull market, to me, I'm not going into Monday being extremely cautious. Um, one, because of Friday's price action, and two, because of the 9:45 news. So normally that will mean that you get some kind of decent price action. And we also had this external swing high up here as a liquidity pool before going to new all-time highs, right? So Thursday we had this drop inside of this 4-hour fair value gap, and price used this 4-hour order block, pretty much the penny, and then goes higher. So this is our new order block, and you can see that this manipulation from Friday was just to run out all of these stops under this area, and our true invalidation point is under here, right? This is our order block. None of these fair value gaps have to hold. Obviously, it is best if they do, but order blocks are really your best friend. And if you guys can see that this 4-hour candle, look at the candle bodies. This one closed outside of the fair value gap, and this one closed right on top of it. So that's just pure manipulation. Seeing that, and then going into Monday, now really all I was looking for was an hourly CSD. So if we see this, you can see we get one during Friday's PM session, creates a fair value gap. Price is respecting the fair value gap. Get another candle closure above here. Down close candles are continuing to act as support. This is our next series of down close candles. We get a candle closure above, dig into that here, and then go higher. So now we are respecting down close candles. Going into Monday, we have a little manipulation below midnight, and then a big rally, and PD rays are being left behind. So now all this to me is very bullish. This is 5 a.m., 6 a.m., 7 a.m. So we'd be at 8 a.m. right now before 9:30 open. There is 9:45 news. Our external swing high has been taken. So now this is where a lot of people get scared and they're like, oh, not going to look for longs anymore. All we have to do is continue to wait for our next key time, which is 9:30. You guys can see that we closed above this external swing high. And if you look, this is actually a breaker. We can see it even better on the 30-minute. We have a low, high, lower low, higher high, right over here. So now we have a higher time frame breaker. And to me, this is where the real change in the state of delivery occurred, because we closed above this really big down close candle. This is where all the manipulation happened. And we closed above right here. And then we used that twice with the breaker. Actually, we never even dig into that here. So that's also a good sign. We just used the breaker, and if you go into a lower time frame, there's a 15-minute and 30-minute fair value gap inside of here. So now that we have our bias, we have our breaker, the order block's not even being used. That's showing even more bullish signs. We can go into the 15-minute, and what are we waiting for? All we're waiting for is 9:30 and then 9:45. So seeing this, here's 9:15. We have a 30-minute fair value gap. Down close candle should act as support. You can see it's just wicking through the fair value gap, but it's closing inside and above the consummate encroachment, which is great. It's always what you want to see. You can see the candle bodies at the top of that fair value gap, and the wicks are just doing the damage inside of that hourly breaker. If we continue to zoom in, we have this small down close candles here, failing to reach inside of this 15-minute BISI, and then closing above this down close candle here, which is this order block should now be held by price if we're going to continue higher. Why? Because 9:30 closed above it. Key time closes above the down close candle. As you can see, open low. What is this? 9:45 news candle, 15-minute. Open low into the 15-minute opening price. And then we just rocket higher. So where did I get in? And if you look at the 1 minute, you can see it's very, very choppy, right? This is why I'm getting further and further away from the 1 minute time frame. But this is where we had 9:45 news right here. Failure to displace through this low was a perfect signature and price for me to look for higher prices. So all I did was wait for what? So this is our order block, right? We can make this a little bigger. This black line. We look at the 5 minute. What do we have? 5 minute down close candle. We close above here at 950. 950 macro confirms this down close candle as acting as what should be real support. We have our consummate encroachment marked out, and what prices could we be targeting? We could be targeting 22,300, which is right here, whole psych number. Or it's your trade. You can do however you want with it, right? You could target 1R, 1.5, 2R, however you trade. So this all my trade was based off of was time and this 5 minute down close candle. So if we go into the 1 minute as well, we had some 1 minute fair value gaps inside of here. So all I did was draw out the wick of this 5 minute order block. I went into the 1 minute time frame. I entered right off of this fair value gap and the 5 minute order block. Really the 5 minute order block is what I was looking at. You can see we're in a little bit of drawdown. All it was doing was using the wick CE of this order block. And then if I go into the 1 minute, you can kind of see how we got confirmed that we are on side. Down close candles are getting closed above. And I was all out of my position here. I entered right off of this high. Stop loss was at this candle's low. And you can see I took off my position at around 30 points, which was almost a 2R trade. And I accidentally closed all of my position, but it ended up working out better for me anyways. My other take profit level would have never got hit before I would have got break even, I'm pretty sure. Yeah, I would have got break even on the other half. So that mistake actually ended up working out in my favor. But yeah, not a bad trade whatsoever. The execution for this trade is on my Twitter if you guys are interested. Really, it's just very simple, just continuing to play higher prices because I've not been proven wrong, right? The only reason that I'm able and confident to take this trade is because time is not aligned with price yet. You can see what time do we start to reverse at. This is 10 o'clock. So you guys can do your own investigation off of that. But order block confirmed by the 950 macro, so I'm going to long that any day of the week, and then time starts to offer that retracement into what? 15-minute PD array down here, big wick, right? And then you can see we ended up hitting our draw on liquidity later on. But yeah, that was all this trade was based off of, time and that order block confirmed by the macro. I hope this framework of understanding the higher time frame narrative, kind of just looking at the PD raised, getting closed above, the short rally below midnight really explained to me that this was going to continue to rally higher until drawn liquidity was met or time was met. And if you look here, this is the classic range to New York Open, London close rally. These are ICT's daily profiles, and you guys can see here if we break it down into the hourly time frame, we just have chop, small manipulation below midnight, and then we get displacement higher, leaving PD arrays, respecting PD arrays, closing above thick down close candles. This is all reinforcing the idea that price action is going to continue higher. But I hope you guys enjoyed. I hope you guys learned something from this video. If you have any questions, you can either leave them in the comment section down below or DM me on Twitter. Either one. I hope you guys enjoyed, and I'll see you guys in the next one.